All right, so good morning, good afternoon, and good evening to all of you. Today, I will use the McGraw Hill Connect by Ross. We'll discuss about the long-term financial planning. Is more on the EFN, the AFN, or additional funds needed, and also about forecasting, and at the same time about growth. We'll discuss more about growth, sustainable growth, or any other growth. To compute for the EFN or the AFN. Okay. So today, our focus is again, objectives of this is to apply the percentage of the sales method. No, we'll discuss also later about the external financing needs, or what you call the AFN, no, to funds the firm's growth, and also the determinants of your growth. No, and also some of the some problems, in terms of planning of growth. No, also we discuss also about the meaning of financial planning, the model, no, the method, which is the sales, or the sales method, or the percentage sales approach, then external financing growth, and some caveat, no, regarding about financial planning models. Okay, sige. All right. So very important here, no, in terms of your uh, forecasting and planning is all about, no, the elements of it. No, ano ba yung elements? No? So very important here is that in financial planning, it establishes, no, the guidelines for the change in the growth of the firm. So lahat naman tayo, class, di ba? If you have your own company, there would be changes, there would be growth, no? And very important here is that it concerned, no, with the firm's financial, about investment, no, without examining down, no, the individual components of the policies. No, so very important here is in terms of your planning, no, to develop the explicit, no, financial plan. All right, so ano yung mga reason, no, what are the things that you need to establish, no, when you have financial policy? Number one daw, very important here is how much would be your investment, no? The firm's needed investment, no? The firm's needed requirement, or investment in the new assets, no? Number two, very important here is the degree of financial leverage. Babalikan natin kung ano mang ibig sabihin ng financial leverage, no? 'Di ba? Pag sinabing leverage in financial is more on measuring your financial risk. Ibig sabihin, you consider here your interest charge, no? Ano yung mga interest charge? Yung ating interest in our bonds, interest in our long-term debt, and at the same time, your preference shares, 'di ba? Babalikan natin in our discussion that the preference shares is a liability, no, on the part of financial management. Okay. Kasi they are just waiting for dividends. Okay? Again, it is only for financial management. And number two, no, or number three, very important here is the amount, okay, of cash the firm thinks is necessary and appropriate to pay shareholders. So, ito naman yung ibig sabihin nito is more on the working capital, no? And also about the amount of liquidity and working capital the firm needs, no, on the ongoing basis. So, yun yung mga reason, no, or yun yung mga needs, no, to be part of the policy. Okay. So, also, when you say about financial planning, no, there would be formulations, no, the way we need to achieve our goals, no, financially, no. And very important is the growth. Okay? As time goes by, growth by itself is not an appropriate goal. Okay? Hindi lang pala growth is an appropriate goal, no? Meaning to say, very important here is the increasing market value of the owner's equity. Okay? So if the firm successful, growth will usually the result. Meaning to say, very important here is to have increasing or increase in the market value. No? So, the growth will follow na lang. Okay? So, what would be the dimensions of financial planning? No? So, establishing the horizon, no? The long-range planning period, no? In which the planning session or the planning process focuses on usually 2 to 5 years. No? Kaya nga ito ay long term. No? And very important is to determine also the aggregations, no, or the process by which the small investment proposals of each firm's operational success or units, no, are added up, no, and also about derived inputs in the form of alternative assumptions. So yun yung mga reason. Kaya nga class, 'di ba, if you notice in the Strama paper, there would be the worst scenario, normal, and the best case. Okay? Alright. So, what can planning accomplish? No? So, ito yung mga reason why we have our planning. Examining interactions, no? So, financial plan must make explicit and linkages or link between the investment proposals. Okay? Exploring options, whether to develop, to analyze, and compare it, no? With different scenarios, no? Avoiding surprises. Kaya nga, very important here is the proper planning. You need to avoid some of the surprises para hindi sila magulat, no? And also ensuring the feasibility and internal consistency. Okay? So, financial planning is a way of verifying the goals and plans now made for the specific areas of operations. And the last one, the most important here is that it forces the managers down to think goals and establishes priorities. You should prioritize your goal, no? Especially in terms of your financial planning. Okay? All right. Very important also, no? Okay. Saan ba nagsisimula, no? Yung planning. Lahat naman nagsisimula sa sales forecast. Even in your budgeting, okay? It all started with the sales forecast, no? Again, nearly all the financial plan required to an externally supplied sales forecast, no? The sales forecast often will be given the growth. Okay. So, nasa sales forecast daw yung computations natin later about growth. Alright, so that's also one now that we need to establish or we need to identify now or how to be able to compute no your growth. You have also your pro forma statements, no? That would be the forecast of your financial plan. That would be pro forma income statement, pro forma cash flows, pro forma balance sheet. And very important here is also about asset requirement. Kailangan ba natin bumili ng equipment? Later we'll discuss about the capacity, no? Also about the requirement financially. Plan will include sections about necessary financial requirements. The plug is designated sources of external financing needed now to deal with any shortfall. Now, so pasiguro. No? And the last one is all about the economic assumptions. No? Plan will explicitly state the economic environment, okay, in which the firms expect to reside over the life no, of the plan. So, paano yun? I will give you sample problem. No? Halimbawa, Computer Field Corporation, FS from the most recent year are as follows. So, you have income statement, sales and the cost of sales, you have your balance sheet, assets, debt, and equity. I will not elaborate more, no, since you know already, no, the components of your sales, of your cost of sales, your assets, no, the different kinds of assets, you have your debt and equity. Okay? Suppose that you have your 20% increase. Now, that would be your growth. So, I mean to say, your 1,000 sales will become 1,200. No? Since the 1 to here, planners would then forecast 20 uh, uh, increase percent increase no in cost. Parang, of course, the cost will vary directly or proportionately to your sales, no? Kung 20% naman yung in-increase ng sales mo, 20% would be the increase of your costs. Okay. So, ibig sabihin, you have 240. Okay? And assume all variables will grow by 20%. Okay? How about in terms of your assets? So, gagawin natin class is that 600 divided by 1,000 times 1, 2. Ganun lang, no? Sige, we'll check kung tama tayo. So, 600 divided by 1,000 times 1, 2. So, sorry, mali pala. No? So, you have here, let's say 100 would be the increase na lang, no? So, hindi siya spontaneous assets, okay? So, what if you have 20% increase na lang? Alright, so you have 100 Then your assets now, your total is 600 plus 100, you have 700. Then you have debt of 50 and 50 and total of 100. Okay, sige. Assets, no, same with the increase. Okay, okay, so simple planning method, no. Next is to reconcile the two pro formas, no. For example, cannot income be equal to 240 and equity increase by 50? All right, so Comterfield must have paid out the difference between the 240 and the 50. So you have here 190. Ano yung 190? Yun yung possible you pay for cash dividends, no? Alright, in which case, dividends are the plug available. Okay? So, yan yung nag-decrease sa atin, no? Suppose Comterfield does not pay out the 190 and the addition to the retained earnings, it is the full of 240. Okay, so it would depends now on your company. So equity will grow to 250 plus 240 net income or 490. The debt must be retired to keep total assets equal to 600. Again, we go back to our definitions we're in. Your asset is equals to your liabilities and owner's equity. Okay? So with the increase of 600 in assets and 490 in equity, all right, debt will have to be 600 minus 490. So parang balancing figure siya, no? Because we started with 250 in debt, Comterfield will have to retire the 250 minus 10. Ibig sabihin, tayo ay nagbayad na ng ating utang. No? That's why you have 110 minus 1, you have now 110, no? From 250 kanina. Okay. So that's part, no? Bahala kayo, no? It would depends on the company whether on how you will be able to set your your forecasting, okay? Next one approach is all about the percentage of sales approach. No, it is a simple financial planning. Every item. Ito yung sinabi ko kanina, no, about the spontaneous assets. No, this way may be reasonable assumptions or the elements of it, but not for the others. So they will do what you call non-spontaneous assets. No, standard version of simple model is examined. Now, okay, so basic idea is to separate the income statement and the balance sheet. All right? Of course, that will vary in terms of the sales. Anong tawag doon? Spontaneous assets. Meaning to say, it will increase also if you have an increase in your sales. No? Yung iba naman, uh, constant. No? It will not change. Alright, so based on the percentage sales approach, a financial planning method in which accounts are varied depending on the firm's predicted sales level. For example, Rosen Garden has projected 25% increase in your sales for the coming year. So from 1,000 magiging 1,250 since your cost is 83.33 by dividing the 833 and 1,000. So just multiply it, the 1,250 by 83%, so you have 1,041. Taxable income of 209 and the tax is 44 and net income would be 165. So from 132 to 165 nag-increase tayo, no? So the effect of this, no, particularly assuming that the costs are constant percentage of your sales and we assume that the profit margin is constant. So meaning to say 132 divided by 1,000 you have 13.2, no? In the pro forma profit margin is, if you notice, 165 divided by 1,250 you have the same. Why? Because you have the same cost increase in your sales and your cost. Kaya parehas talaga yan. Okay. So, meaning to say, very important also in the sales approach is what you call dividend payout. Bakit? Because we need also to compute for the retention ratio. No? How do we compute for retention ratio or plowback ratio? 1 minus your dividend payout. Yan. Okay? So, assuming dividend payout is constant and here are the projected dividend in addition to the retained earnings. No? So, 165 times 1/3 is 55. Then, yung 2/3 naman ay yung plowback period or retention period kasi part na siya ng ating addition to our retained earnings. Again, babalikan natin. Pag tayo ay may utang, the dividends is distributed to our shareholder, and that would be your dividend payout. 100% minus dividend payout, that would be your retention ratio or plowback ratio. Yan, okay? So, yan ang importante, no, in the financial planning, especially when you compute for the EFN. Okay? For example, in the most recent year, no, provided below. So, your assets, 160,440, inventory of 600, then you have total, then fixed assets, then you have current liabilities, long-term debt, owner's equity. So, 160 just divided by the percentage now for each that vary with sales, we express as a percentage of your sales. Meaning to say 160 divided by, we will go back again, divided by 1,000. Diba? Ito yan, 1,000. Yan. Okay? So then, for 40 divided by 1,000, ibig sabihin, your cash, your AR, your inventory, they vary directly and proportionally to your sales. No? Alright? Net front assets naman, ganun din. So you have 180. No? Alright? So you have accounts payable. Notes payable, hindi. No? So they are non-spontaneous liabilities. Also with your long-term debt, common equity, retained earnings, yes, if you have an increase in your net income. Okay? So again, it will you will need to compute for the spontaneous assets, no, that will vary in terms of your sales. And also very important also is the last, no, the ratio of your total assets to sales, baliktad, no? Ang tawag ng class ay capital intensity ratio. O ano yung formula ng sales divided by total assets, di ba? Yan yung ating ROA. Ibig sabihin, kabaliktaran ng ROA is the capital intensity ratio. What do you mean of capital intensity ratio? Yan yung ratio wherein if you can be able to pay pa or to purchase your property, plant, and equipment. I think I have sample here naman. No? For example, as part of the pro forma entry, no? So, ito yung kanina, to construct the pro forma entry, no? And the use of the percentage, okay. So, 200 class divided by 1,000 times 1,250. Try nga natin. Dapat, sorry, it should be, kanina, magkano yon? Mali ako. Kanina pala it is 160. Class, 160 divided by 1,000 times 1,250. Tama ba na 200? Yes, tama. Tama, ito ay 200. Again, 550. AR naman tayo. 550 divided by 1,000 times 1,250. Ano yung 1,250? Increase in your sales. Alright. Yan. 750. Ganun din. 750 divided by 1,000 times 150. And so on and so forth. Ganun lang ha. Okay? Ito pag-compute natin ng forecasting. Okay? Pero yung ating, if you notice, yung ating iba ay hindi nag-change, no? Common equity, yung RES, no? With the dividends. Okay. So, alternative scenario, ito naman is what if hindi kaya, no? Capacity utilization can be complicated equations, no? So, very important here is to be able for us, no, to have this, no? We effectively assume Rosengarten, no, was using the fixed assets, all right, at 100%. So, we need to have 100% capacity because of any increase in your sales. Ibig sabihin, there's no hindrance, there's no bottleneck, there's no there's no constraints. Okay, assuming or assumptions of 100% capacity utilization is not unrealistic, or it is realistic for certain industries, but others have significantly excess capacity. No, if we assume Rosengarten is operating at 70%, just divide the 70%, no, by the current sales. That's why current sales is 70% at the full capacity para makuha natin yung ating 100%, no? So the external or need for external funds is quite different. Sales could increase by almost 43% from 1 million to 1,249 before the new fixed assets would be needed. Okay? So as a result, the estimate here is 565 in external funds needed, and it is too high. Class, ano ginawa natin? Yung 1,000 is equals to 70% times full capacity. Meaning to say, 1,000 is your sales mo, S0, divided by 70%, so you have 1,429. Ano yung 1,429? That would be your maximum sales. Dapat yan to be compared with our growth, dapat inilalagpas sa 1,429. Pag lumagpas sa 1,429, meaning to say, you need to purchase additional PPE. Okay. Yan. So, in the EFN and the capacity usage, no? So, suppose Rosengarten is operating at 90% capacity, what would be the full capacity? Again, just divide 1,000 by 90%. Magkano yung maximum natin? 1,111. Okay? From the 4.3, we know that the fixed assets are 1.8. Okay, at full capacity, the ratio of the fixed assets to sales is, so just divide the fixed assets and the full capacity. All right, so kanina we compute for the capacity, no? So 1.8 divided by 1,111, ibig sabihin, there would be 1.62. Ibig sabihin, class, in every 1.62, they needs to have 1.62, no, in the fixed assets for every $1 in sales, no, once it reaches the full capacity, no. So all the projected sales level up at 1,250, then it needs to have 1,250 times 1.62. Ibig sabihin, yung ating projected na 1,250, just multiply it by the 1.62 for the capacity, no, of the assets. So meaning to say, how much now would be your total, or the new balance of the fixed assets? 2025. Okay? So compared with the 2,250 we originally projected, this is less. Mas maganda, no? Okay. Mas mababa kasi yung ating price na pagbili ng ating property, plant, and equipment, no? Current assets would still be 1.5. So the assets would be 1.5 plus 2,025. So bago na, 3,525 na, because you will increase your property, plant, and equipment, no? And the capacity intensity ratio would thus be 3,525. That would be your total assets divided by 1,250. The 1,250 is your sales level projected. So you have 2.82, which is less than our original value of 3 because of the excess capacity. So, ibig sabihin, class, very important here is to consider any excess capacity. Alright. Again, I will give you more problems, don't worry, no? Alright, as time goes by. Very important also, class, is the growth and external financing. So, we have near what you hold additional funds needed na, no? External financing, needed, and growth are related, no? They are related, no? The AFN and the growth daw are related, no? All other things staying the same, the higher the rate of the growth in the sales or the assets, the greater will be need for external financing. Yes, no? All right. So Hoffman is forecasting next year's sales level at 600, 100 increase. So ibig sabihin, 100 divided by your sales, you have 20%. So we can have the pro forma income statement and the balance sheet. So if you have 20% growth, Hoffman needs to have 100 in our new assets. Okay? And with this, projected addition to the retained earnings is 52.8, and the external financing need is 100 minus 2.8. You have 47.2. Okay. So that would be, class, now the pro forma income statement. So also, very important, class, is what you call the equity or debt to equity ratio, no? So for Hoffman, which is 1, nakataon lang, no? So assume Hoffman does not wish to sell new equity, which in case 47.2 in the EFN will have to be borrowed. Okay? So in the owner's equity, the projected 302.8, and the new asset debt will be the original 250 plus your borrowings of 27.3 or 297.2 total, no? So if you compute for a debt to equity ratio, it does fall from 1.0 to 0.98. Pumangit pa. Tama lang naman pala. It would depends on the company. Okay. Also, very important is, ito na yun, no? the Hoffman income statement, and your balance sheet. So doing that is sales 500 minus 416, you have 83.5. Then your tax of 21%, for example, you have 17.5, you have 66 na. Alright, in the balance sheet naman, current assets, of course, you have 200, 300. Dapat parehas yan, no? So just divide it now by the percentage. So you have 1460. Alright, not applicable. Okay, as a percentage of sales, ha? 200 divided by 500 yun, ha? Then 300 divided by 500. Kaya 40, no? Okay. So, paano yun, sir, no? So, Hoffman Company Pro Forma Income Statement. Alright, so, yan. So, ibig sabihin, gawin natin ay 200 divided by 500 times, ano ba yung increase natin? 100, 600, no? So, ganun lang. Alright, so, 200, again, 200 divided by, so, try natin ha sa calculator. 200 divided by 500 times, sorry, 200 divided by 500 times 600. Tama ba na 240? I think so. Yes, tama yan, no? Okay, 240. Ay, sorry. Tama, 240, 300. So, ibig sabihin, your current assets and net fixed assets will increase, no? Pag tumaas yung ating sales. But the debt naman ay walang change, and your owner's equity. Okay? Alright. So, also very important is what you call growth, no? In financial planning, no? So, growth and the projected EFN for the Hoffman Company. For relatively low growth rates, now Hoffman will run a surplus and its debt to equity will decline. No? Once the growth rate increases to about 10%, surplus becomes deficit. Siyempre, ha? At the growth rate exceeds approximately 20%, the debt to equity naman surpasses the original value. No? So, I have sample here. So if you have 0, 5, 10, 15 as growth projected, then increase in your assets required. Of course, habang tumataas din yung ating increase in our assets, no? And also about addition to the retained earnings. So based on your income statement, then you need to have the AFN or EFN, no, for this. Okay, so you have kaya negative, no, negative siya. Then you have projected debt to equity ratio. Okay. So we go one by one, ha. Alright. Very important also, class, no? In terms of this one is what you call the growth, no? So ano yung mga internal growth rate, no? So but what do you mean of internal growth rate, no? Just the maximum growth rate a firm can achieve without external financing. Ibig sabihin, sa loob muna tayo magkakaroon ng internal growth. What is the formula? ROA, okay, to be multiplied by your B, alright, divided by 1 minus ROA to be multiplied by B. So, ibig sabihin, B here is about your ratio, no? Alright, so if you have 2/3, okay, ROA is the return on assets, no? Okay, for Hoffman, net income was 66 and the assets naman is 500. So ROA is the 66 divided by 500, you have 0.132. Okay? So you have 13.2%. Of the 66 net income, 44 was retained. So the plowback ratio is that you have 44 divided by 66. So, meron na klase, alright, so ibig sabihin sa ating net income of 66, 44 was retained. Depende yan klase sa dividend payout and sa ating retention ratio, no? So the plowback ratio of B is 44 as retained divided by 66%. So that would be the plowback yung B, ha? Okay? So, ibig sabihin, you have 9.64 internal growth rate. Again, ha, the formula here is ROA to be multiplied by the plowback ratio or the retention ratio divided by 1 minus ROA times plowback ratio. Okay? So, magkano crash yung ating internal growth rate? 9.64%. Okay? Please take note of this. Lumalabas yan sa board exam. Now, Hoffman Company can expand at a maximum of 9.64% without the external financing need. Okay, ito ay more on internal growth rate. Okay? How about naman if you have sustainable growth rate? How do we do that, no? But before that, ano yung meaning ng sustainable growth rate? It is the maximum growth rate a firm can achieve without external equity financing while maintaining constant debt to equity. Same siya kanina ng internal growth rate. Ito naman, ganun pa rin sa loob pa rin, no? While maintaining naman constant debt to equity. Ano yung formula ng sustainable growth rate? ROE to be multiplied by B again, the plowback ratio divided by 1 minus ROE to be multiplied by the plowback ratio. No? So for Hoffman, net income was 66 pesos and the equity naman is worth 250. No? So magkano yung ROE? 66 your net income divided by your equity of 250. So you have 0.264 or 26.4%. Plowback ratio naman is 2/3, no? So ibig sabihin, that would be your plowback. Kanina, di ba, we compute for that, no? So retention ratio, ito yan. We go back, ha. Retention ratio to be divided by, ito ba yan? Yes, no? 2/3, no? Net income, no? 44 retained earnings divided by your net income, 2/3. Okay. So Hoffman can expand at a maximum of 21.34 per year without external financing needs. Okay? So that would be your sustainable growth rate. Okay? Okay, hopefully you understand that. Alright. Next one naman, very important, is about determinants of the growth, no? So ano yung mga determinants of growth, no? So the firm, all right, able is sustained growth depends on the following factors. So you have your profit margin, di ba? Parang DuPont siya, no? So an increase in the profit margin will also increase the firm's ability to generate funds internally. You have dividend policy, you have financial policy, and you have your total asset turnover. So lahat yan ay importante, no? So if the firm has at wish to sell new equity and the profit margin, dividend policy, financial policy, and total turnover are all fixed. Yan. Okay? Very important is what you hold, no? Okay? Yan. Okay? Next one. Some caveat, no? Regarding our financial planning models, no? Financial planning models do not always ask the right question. Yun yung sabi, no? Primarily because they tend to rely on the accounting relationship and not your relationship financial, no? So what are the three basic elements of the firm value, no, that tend to left out, no? Hindi kasali. Cash flow, size, risk, and the timing. Pero kailangan kasama yan lagi, no? So financial planning as an iterative process. Alright, so plans are created, examined, and modified over and over. Financial plan or final plan will be the result negotiated between all the different parties to the process. No? And financial plan will implicitly contain different goals. Yeah. Okay. And different areas and also satisfy many constraints. Okay. That's why class, no? Babalikan natin yung ating questions kanina. Why should the firm draw a financial plan? Of course, for us to set objectives, di ba? The basic elements of the financial plan. Di ba, nagsisimula tayo in terms of their sales. That's why in number 3, what is the idea behind the percentage of sales approach? That would be, di ba? That would be your spontaneous assets, no? Ano yung mga assets na magbabago if there would also be an increase in your sales, no? Determinants of growth, no? Depende if it would be internal or sustainable growth, di ba? And then some elements of it, no? Of course, very important is the proper financial planning and to identify also about your growth. All right, so again, this is my last slide, no? So again, thank you very much, no? And we hope to see you soon. I will post many videos about financial planning, financial management, management accounting, cost accounting, and more on the management accounting. So again, thank you very much and hope to see you soon. Bye bye.